All right, guys, let's get to it, Jim. We mentioned some of the Reddit trades down in the pre-market, taking out some lows from the middle of last week, but also VIX below 28 and oil above 55 for the first time in a year.
Yeah, this is great news for the VIX. We needed that to start going down while the market went up. That's more normal. It's interesting that oil going up, even though first world demand is going down. I'm sure we'll talk about Exxon. The GameStop issue, my nephew and head writer and only writer, Cliff Mason, came up with what I thought was by far the best analysis, was a series of things they could have done when they had a higher stock price. They could still do it, but including reinventing the company, perhaps becoming more of an exchange place like StockX for sneakers, maybe even being a gaming palace, buying David and my old friend Zynga. They haven't done that. They've been mum. But, David, I will tell you one thing about GameStop. It's been missing the whole time. They are incredibly nice.
Okay. Well, anybody who's watched for any length of time understands what is really meant by that statement, Jim. But you've been talking about this possibility of them having sold stock to raise a good amount of money to perhaps, as you say, redirect the strategy of the company. They haven't done it yet. We'll see. But, Jim, we've been talking about this now for more than a week. Let's call it roughly a week. There has been little doubt as to where this stock, I think, would eventually end up. The only question was how long it would take to get there.
Right. And I think, David, one of the critical aspects that you talk about better than anyone on air was that there was actually a cost to be able to stay short that had a lot more to do with the ability of the hedge funds to have staying power versus a company that may be in more trouble. And, David, you know the actual toll on borrowing shares was very high here.
Well, not to mention, of course, the unlimited downside you have from shorting a stock, which is something we can come back to and probably should occasionally to remind people. It's one thing when you buy, 10 shares of a $100 stock, you could lose $1,000. But if you short 10 shares of a $100 stock, well, it's still unlimited, isn't it? When it goes to 200, yeah, you're down 1,000. When it goes to 300, 400, 500, that, of course, was the case with Melvin Capital, which we pointed out many times. A very rigorous hedge fund when it came to analysis, but perhaps not so much in terms of at least understanding the risk they were taking on by having so much of the float short and the other copycat trades that had taken place in the market, Jim, as well, with shorting GameStop. They're not here potentially to benefit from this fall. A number of other hedge funds may be, Jim, in terms of the short side, but we also pointed out that when the shorts sort of dried up is when this perhaps would become more of a concern for those who had decided to buy it with such fervor.
Right. And, Carl, one of the things that I think people have to get away from is the idea, okay, which GameStop, what's the next one? Well, is it, say, AMC? No, because Adam Aron, the CEO, he's announced that he has an at-the-money offering. Is it American Airlines? No, they took advantage of this and they issued stock. Is it Bed Bath & Beyond? No, Mark Tritton's got a turnaround, and so his is not likely. Is it some of these stocks like a Virgin, a SPAC? Well, Churchill 4, these things, they're not short squeezes. That's just excitement. But the idea that you could find a GameStop, I've been looking for the next GameStop, something that people could run with. It's hard, Carl. I can't find one.
Yeah, it's fascinating. Goldman's got a great note out this morning from Jeff Curry talking about why it's basically near impossible for Reddit traders to corner, say, the silver market the way they did back on Silver Thursday.
Shepard Smith here. Thanks for watching CNBC on YouTube.